Time now for Hot Picks. We are looking for winners in tech. There's a lot of them. Shane Obata, Portfolio Manager at Middlefield Capital. I mean, you've had a nice run. Just go home, right? For the rest of the year, lock it in and go sit on a beach.
July is seasonally a very good month for tech, so I had my fingers crossed coming into the year. I think the NASDAQ was 15 for 15.
Yeah.
So it's going well. I think if you're thinking broader portfolio context, have some value. See the banks doing well today, have some energy, but why not keep some momentum too? There's clear areas of momentum, two that come to mind: technology, industrials. Stay with strength, I think.
So the complaints, as we focus on tech, are valuation, and they've been doing all the work. It's a source of profits to buy all those other sectors.
Right. There was a time last year when people were saying, okay, the FANG stocks, if you look at the FANG Plus Index, for example, these names that used to grow twice as fast as the market and have higher earnings growth, that whole narrative was gone, but now it's come back. And if we look forward, they should generate 2 to 3 times the sales growth. And part of this is kind of generative AI and other optimism, but I think there's fundamental underpinnings here is what I was getting at. So another important thing, revisions. We know tech's been kind of in the doghouse for quite a while now. Into next year, if the market has correctly called this soft landing, which has been our base case for a while, then tech is supposed to generate higher earnings growth than the market next year.
Than the market?
Than the market, broadly speaking.
Which it hasn't been doing, right? Its share of profits has been falling.
It's had 5 pretty bad quarters, and I think this quarter we're going to see expectations are for, call it, -4% earnings growth for tech. But as we know, Q2 is supposed to be the bottom.
Yeah.
So if Q2 is the bottom for earnings, broadly speaking, and including tech.
If it's a soft landing.
Right. I think why not stay with it?
Okay, so let's get into your picks. Broadcom is one of them. You mentioned the semiconductors. Everybody talks about NVIDIA. Why do you like Broadcom?
This is a tangible beneficiary of AI. So they do numerous things, mostly semiconductors, some infrastructure software. But most interestingly, they've been partnering with some of the hyperscalers, Google being the main one, and then also Meta on these custom chips. So we know that these companies have said probably behind closed doors, okay, NVIDIA's got a lot of power here. Why can't we do some of this internally? And so, for example, Broadcom and Google have been partnered for years on their TPU processors. So they designed them together. These are multi-billion-dollar partnerships. They generate billions a year.
Yeah.
And so, whereas NVIDIA really fully embraced the AI trend and takes in all the hype, Broadcom's management is a lot more muted. And they've basically said, we're going to see where the orders take us. But it could very well be that next year we see about, fiscal year 2024, we see about $7.5 to $8 billion of directly AI-related revenues.
So is that priced in? I'm just looking at Bloomberg consensus for revenue growth. That's pretty tepid compared to an NVIDIA.
Yeah. We think this is one that's probably going to do high single-digit revenue growth, low double-digit EPS growth for the foreseeable future.
And is that okay?
It's okay.
Well, because NVIDIA is telling us that's 50% in the next quarter.
Right. This one's a lot cheaper, though.
Okay.
Valuation has expanded quite a lot. I think we're around 20 times forward earnings right now, up from, I believe, well under 16 times. So there has been expansion, but...
Pending deal with VMware goes through?
It's not in our numbers yet, but it could go through. We're in that environment where the antitrust people are not winning, so... And
does it affect the stock, I guess, one way or another? If it's not in your numbers, is it not in the street numbers either?
I think people are considering it. It's a very big deal, $61 billion deal. VMware is slow and steady growth software, so not the kind of software that we usually hear about. But I think it will add another element. Part of the Broadcom story over time has been to get more recurring revenue, and that's been part of the valuation expansion story. So I think it can be helpful if it goes through.
Okay, Amazon is part of the band of Magnificent Seven, and its rally has been, it hasn't made new all-time highs like the NASDAQ or the FANG has. It's still kind of definitely way off of where it was in 2021. Slowdown in cloud, slowdown in consumer spending, those are the two chief complaints about Amazon, and how do you counter those?
I think when we think about Amazon, they got away with, for the longest time ever, never being profitable. And Bezos said, we're reinvesting in the business. And we all said, fine, it's great, keep growing. Now, I think in the current interest rate environment, it's different, right? We need to see profits, but we think that the bar is very low for this company. We're talking about a company that as a whole generates a net income margin of under 2%. That could easily grow to 8, 9, 10 over the next 5 years. And so some of the key drivers, you talked about AWS. We've seen estimates that maybe this quarter is under 10% growth, which is pretty crazy considering it used to be in the 30s.
Yeah.
But the generative AI could put a bottom into the cloud deceleration. So this could be the low point for the year.
So they could be a beneficiary.
Yes. I think that was part of the reason I wanted to talk about them today, is because no one mentions, they're not really mentioned as an AI beneficiary yet. But the way I like to think about it with Amazon is, we know that companies are shifting to the cloud to save on expenses, et cetera. We know how many people are partnered with AWS. It's the largest cloud provider. So if you don't want to spend $100 million building out an AI data center yourself, who's a natural place to go to?
And they can do that.
They can do that. They have out-of-the-box tools that you can do it with.
And it's lagged 60%. That's nice. We'll take that for 2023,
Yeah.
But it's lagged the FANGs, which are up on average, 90%.
Right. So, like I said, the profitability standpoint here is much different than I think a lot of the other players. So it's still a show me story. You also noted e-commerce growth, right? E-commerce was, I believe the numbers are something like just under 11% of sales in 2019. And then we saw a step up through COVID to approaching 16, I think above 15%. So basically, we had this massive ramp up in investments, and that hurt margins. And then we realized that we were getting back outside. E-commerce was a little bit weak, but we're expecting e-commerce penetration to continue going up, even though e-commerce growth right now is still a little bit muted at around 5%.
Okay, I like these picks. They're a little bit outside of the normal conversation, which I appreciate. And Palo Alto Networks is your third. This one's sitting close to a record high.
Yeah. Don't be scared of record highs. I think people should like record highs more. I mean, don't we want our stocks at record highs all the time?
Yeah, that'd be great.
It's a side point. So this is our top pick in cybersecurity. The company originally was, and still has its roots in network security. So they did physical firewalls back in the day, and that was part of the bear case until recently about kind of outdated whatever. And so with Palo Alto, we think they're going to become one of the key platforms in cybersecurity. There's three main areas of cybersecurity solutions. One is endpoint, so like protecting your PC. One is network, protecting your network. The other one is cloud. And so different players specialize in different areas, but we think Palo Alto has the ability to do all three. And it fits into a broader trend, we think, of vendor consolidation, right? I think everyone's in this cost efficiency mindset right now, coming through COVID and the war in Ukraine and whatnot. So why do I want to have 5 different software vendors? Why do I want to have 3 different cybersecurity vendors? So in the same way that Microsoft benefits with their suite of products, we think that Palo Alto will do that in cyber.